the copper for my dear friend Philip. So where is my Euro Aussie? Now, why is the Euro Aussie such a good currency to look at? Because we know that the Aussie is strong, and yet we know that the Euro is now weak. And if you take a look at this chart, that's why the choice that Bill has chosen is actually brilliant. This is one of the most magnificent trends that we have, and it is definitely a high probability. It is something that we want to be in, and even if the Aussie breaks against the dollar and starts moving down, the Euro will also break, and both of them will be breaking. And in this case, you're taking two currencies to the downside. You're going long the strong of the Aussie, which is the stronger, and you're taking the Euro to the downside. So this is a brilliant currency to look at. And again, because you're in such a confirmed downtrend, it makes it easy. And this is, I want you to see this, Bill, because you have this is something you have the long term. You've taken the long term, Bill. This is one of the trades that you should have been in. Take a look at this. You should have been shorted. See what this is, the structure point 174, 172, and that is the trade. As soon as it gets below the structure, you have now your trade. So the trade is short from 169, and it closed the trade at 152. So you had 1,000. What? How many pips is that, Bill? I'm just making this point because you should have taken that trade. Okay. Right, and what else? You are already now 1,700 pips. Okay. And now you're short again from 139 or 140. You're short again, and you have another 500 pips. Oh, well done. You took it. Okay, I stand corrected. So, okay, hold on. Okay, hold on. No. I'm happy, Bill. That's what I want. I love it when you guys take these trades. I mean, that is... I am so proud of you, Bill. And we'll give you the ka-chink. And another ka-chink. All right. So, right now, Bill, you have the whole thing is set up working nice, and you're staying with the trade. So there is no reason. Let me turn off the strategy. So there is no reason why you should. If you are you in it, you have a long-term position in it, Bill, now, or okay? So there is no reason for you to get out until it gets probably to the one, not before 134.62 to get out of the trade. If any of you wants to take this trade new, you just give it a couple of hundred pips. This is, you have it as a long-term, Bill. So Any guy that wants, you want to take this trade, you want to take it short below 134. Let's see the intraday. Actually, on the intraday, you want to take it short below 133.84. And if you're even looking at buying it, I mean, there's no reason to buy it, but that's it, the 134.60, the one I was telling you about. Okay, and if you're going to go short here, you're going to place your stop above 134. This stop is for the guys in the short-term bill. It's not for you. You take the long-term, the big stop. You want to stay with the trade. Okay. And the long stop, you buy it. You guys, I mean, there is no real excitement in taking the Euro Aussie long, but if you do, you want to place a tight stop on it because you don't want it to reverse back on you too much. So your long stop is going to be 134.12, which is right below the market side. I'll make it 10. Okay, the structure long is La La Land, so I'm going to leave it. The structure short is also La La Land. There's nothing but air underneath it, so I'm going to leave it. All right, and this is the Euro Aussie. You want to take it short below, primarily want to take it short below 133.84. The structure low is air, there's nothing underneath it, and your stop on the short is 133. What's there? I'm sorry about that. Take it short, your stop is 134.12. I upturned about 134.12. You can leave them both at the same. Okay. Alright, so 134.62, that's your buying point. Your stop is 134.12, so you're risking about 50 pips on that trade. And if you go short, you're going to go short below 133.84. And again, your stop is still the same 134.12 because you don't want to have an upside down position on that trade. Okay? Alright.